predict in the next 10 years that crypto, blockchain, Bitcoin, all of this innovation will be the 12th sector of the S&P.
That was a portion of the Bitcoin 2022 keynote from venture capitalist and Shark Tank investor Kevin O'Leary. And O'Leary went on to say that we need policy. What we need is policy. We need the government to catch up with us. The venture capitalist, popularly known as Mr. Wonderful, joins us now. Kevin, thanks so much for taking the time here with us today. We do know that mass adoption of tech innovation has had this history of outpacing government regulation. So how confident are you that sensible government regulation will happen in blockchain and cryptocurrency before true mass adoption and the next inflection point happens?
I'm very confident because the pace and acceleration of policy proposals coming out of bipartisan Senate committees on the Hill has never been greater. We've got the Loomis bill, we have the Haggerty bill for stablecoin, the Toomey bill for stablecoin, we have the POTUS executive order, all within 6 weeks of each other, all discussing the future of cryptocurrencies. And you're right, we need to catch up with the rest of the world here because regulators in other jurisdictions like Canada, the first to allow a Bitcoin ETF and Ethereum ETF, the first crypto exchange dealer broker was licensed there across the country. Switzerland, England, United Arab Emirates, they're far advanced. And I think our government understands now that we've got to catch up quickly. And you saw a major move just yesterday in the announcement of BlackRock and Fidelity putting $400 million into USDC, the Circle product. That's unprecedented for such staid financial services companies to make a bet that large on cryptocurrency.
Kevin, Dave Briggs here. Got to get your take on Elon today. The offer, $54.20 per share to take over Twitter. And your friend Mark Cuban says he thinks that Elon is just effing with the SEC. What do you think he's doing? What should the board do? And if you're to have a beer with Elon Musk or a joint, I guess, in the case with Elon, what do you want to ask him about all this?
I don't think this is a crazy move he's making. I'll tell you why. Elon Musk and Tesla is the only automotive company in the world that doesn't have to spend a dime on marketing. And a lot of that came from his use of Twitter over the years as a vehicle, as a megaphone to talk about the innovations of his products and services, whether it be in space or electric cars or what have you. And he took advantage of that. Now he starts to see the platform go awry. And if you're an investor in this thing, as I have been, this is a miserable, miserable stock. I mean, it's delivered no value to shareholders for a very long time. Now, maybe you blame the platform, or maybe you blame the management, or maybe it's a combination of both, but it doesn't matter. It's been misery. If someone offered me $50+ a share for this, that's a done deal right now, because I don't know how you monetize this thing. It's been really clipped. Even in the heyday when Trump was using it as a promotional vehicle for his campaign, it wasn't Twitter that delivered the eyeballs. It was other media taking the tweet and then broadcasting it. So from that respect, it's really not used by that many people in the United States. It's a very small subsegment, not a great advertising vehicle. And now you have all of this decision is trying to curate which voices should be on it and not. That doesn't help long term. I think this company needs to be shaken up, and if Elon wants to do that, let him do it. Somebody has to do it. It's just been miserable for investors.
I mean, and speaking of turnarounds, though, when you think of where Bitcoin and crypto started versus where it is now, I mean, you weren't always this bullish on crypto. What was the turning point for you? And what do you think is going to be the turning point for the next wave of crypto investors?
The turning point for me was change in policy by regulators. I'm a highly regulated individual because I have so many investments in traditional financial services companies. Now, Bitcoin is not a coin, it's software. Ethereum is software. Polygon is software. All of these are software development teams creating innovation in financial services, the largest market in the world. And to the extent that they can add value, transparency, speed, all of that, that's why it has such potential, and it hasn't gone away. Now, sure, the prices are volatile, and the reason the prices are volatile is that sovereign funds and pension plans, for all the excitement about Bitcoin and cryptocurrencies, own this much of it, nothing. And they're not going to do that until there's policy in place. You want price stability, you want price appreciation, allow a sovereign running a $200 billion mandate, a 1% position in Bitcoin. That's how you get there. But they're not going to do it until there's policy in place. And so I'm very pro-policy on this. I'm very fortunate I've been able to meet these senators, discuss their bills with them. I'm glad that they're asking private citizens to come to the Hill and give their input. That's great. But again, we've got to accelerate this policy. And I think the best way to do it is pick one asset class. Let's go stable coins. The Toomey bill, the Haggerty bill, both propose and contemplate making this a policy decision. They want transparency. They want to see what's backing up the stable coin, if it's US dollar and what other assets. They want to audit it every 30 days. I'm fine with that. And they don't want any assets inside it longer duration than 12 months. That makes total sense to me. Now, why wouldn't we push one of those bills through and get this one asset class that allows people to buy stable coins, lend them out at 4 to 6% interest, and at least protect their capital against inflation? You can't do that with savings in a bank account. You're basically being taxed at 5.5% with 6% inflation. Nobody gets more than 50 basis points of interest anymore. So there's really good use case for this, and we've got to get it going, and policy is the way to do it. So I'm very encouraged about that. Now, obviously, as an investor, this is now, I really believe that crypto will be the 12th sector of the S&P in 10 years. So I'm going to invest accordingly. It's now 20% of my operating company's portfolio across 32 different positions. I'm very comfortable with my diversity. And yes, there's volatility, but I'm essentially waiting for the government. I want to be ahead of the curve. I want to own Bitcoin before the sovereign wealth funds buy it. And that's my bet. Now, everybody else has a different opinion. That's fine. But clearly, on the first day at Bitcoin 2022, when I made that keynote on the Wednesday, that was 1,500 institutional investors. That's the first time that's ever happened. Now, they own nothing, but they've come to learn, and that's the first step. And then you've got all the policy coming our way. This is all good as far as I'm concerned.
If you did get policy, what type of exposure would you be willing to add on to your portfolio?
I'm maxed out already. I'm 20%. So my rules are basically the standard portfolio management rule. You can never have more than 20% in any one sector and no more than 5% in any one stock. That's where I'm at right now with crypto. But this is a different time, because how many times in your investment career do you get an opportunity to invest in a brand new sector of the S&P? Never. This is a once in a lifetime opportunity. Now, either you believe that or you don't. You have to make your decision. But once you say yes to crypto, you need diversification, you need policy, and you have to have a team that understands it. We don't have the compliance infrastructure yet, but that's coming. Look at the work that's going on at Circle to make it really easy for institutions to use USDC on a compliant basis. Look at FTX. That's a really investment-grade compliant platform. Now, I have to disclose I'm a shareholder in FTX and a paid spokesperson, but I use the product. I don't endorse anything I don't use. So at the end of the day, you've got a lot of innovation coming here, and you have to make a decision as to when you're going to engage. I've made mine.
What role do you anticipate that centralized finance will attempt to play in decentralized finance?
Great question. Now, in my case, I'm betting both, and here's why I'm doing that. Let's go up to a jurisdiction that's far advanced to ours right now. That's Canada, where they licensed the very first crypto exchange with a dealer broker license. That is a centralized wallet. So Canadians are now allowed to download that app in every province. They can ACH cash from their bank account right into the exchange account. They can trade certain coins that the regulator has approved there on a compliant basis. They have tax reporting as well. But the key to that, it's a central wallet. But we found out, now I know this because a company I'm involved in and a shareholder in called WonderFi acquired that license recently. And what we found immediately was the accounts, the 400,000 plus accounts, also wanted a decentralized wallet for things like NFTs. So there's a use case for both. Once you acquire the customer, you don't want to lose them. So we immediately made it easy for those that wanted both to have both, because you may want to keep certain assets in a decentralized wallet where you have direct ownership versus fractional ownership in a centralized wallet. But the point is, why not give users both? And that's what happened up in Canada. I think the same thing's going to happen here stateside. Same thing in United Arab Emirates, Brazil, Switzerland, Germany, England. There's so much innovation going on in different geographies with regulators at different stages of releasing policy on this that we have fallen behind in the US. And that's why these bills are coming so fast and furious, including the POTUS executive order.
Speaking of, perhaps we need a crypto-friendly president. Yesterday, it was interesting. Mick Mulvaney, the former chief of staff of President Trump, said 3 people could beat Trump. He said Tim Scott, the senator from South Carolina. He said Ron DeSantis, the Florida governor. And then he added The Rock as a third. Is someone from the business world capable of running and winning the presidency? And who would you vote for?
Well, there's precedent for what The Rock did. I mean, obviously, Trump was a very famous television reality star. I knew that because Shark Tank and Celebrity Apprentice started at the same time, and we used to run into each other in the forwards all the time. And he used that platform to build policy, which was very friendly at the end of the day. You may not have liked him as a president, and I hate to get into politics, but his policy was very pro-business. And that's really what I think a lot of people are looking for, some guidance on a more pro-business aspect. I will say one thing about the POTUS order. Having read it, you'll notice deep buried in the back end of it is this comment about climate change, and that is a direct swipe at Bitcoin mining companies. One thing to note, and I brought this up at the keynote at Bitcoin 2022, you try and have to figure out, in terms of investing in Bitcoin, one way to do it is if you're not allowed to own the coin itself, you can own the shares of public mining companies which trade in proxy to Bitcoin pricing. And so companies like Marathon, Hut 8, Hive, Riot, they're all great companies that were mining Bitcoin, and they were using carbon offsets to claim carbon neutrality. Well, if you read the POTUS order, and even worse to that, the memo from the SEC in the last few weeks, they're going to require audits of carbon credits. Now, everybody knows carbon credits are BS, if I may use that term and excuse my language, because there's no way to audit it. There's no ledger. You can't do an activity that creates carbon and say you bought an acre of the Amazon rainforest and say they offset each other. But the SEC order contemplates asking an auditor to sign that statement, just like a financial statement every quarter, taking on risks that they will not take on. So I mean, in the case of those companies that I had indexed for ownership in Bitcoin, I sold them all because they've got a world of hurt coming. The new model for Bitcoin mining that is emerging very quickly because of what the POTUS order said and because what the SEC is indicating in their memo is that it's hydropower, hydroelectricity, and nuclear power that is the best way to mine Bitcoin. And those projects are springing up all over the place, all around the world. The biggest one right now is in northern Norway. It's called the Norway Project. It's run by a private company called BitZero. The largest shareholder is the United Arab Emirates. So they're providing the equipment and the capital to build that out, all hydroelectricity. But watch projects come in upstate New York, Montana, North Dakota, Tennessee Valley. These are all areas where there is hydroelectricity available. And so this is the new model. So it's pretty tough for the early pioneers in Bitcoin mining who got stuck before anybody knew anything about this carbon audit stuff. They're the ones with the arrows in their back. And then these new companies over the next 24 months will go public, like the BitZeros, and institutional capital will go there. But this whole Bitcoin mining issue is going to be long-term good because about 85% of dams in America were built contemplating turbines that were never installed. Now investors like me are happy to install those turbines if we get the right to put a data center beside the dam. This is a really interesting innovation that will push us to more green electricity.
Tremendous amount of due diligence, and can confirm you are allowed to say BS. It's just my initials. Kevin, we appreciate the time as always. Kevin O'Leary, investor, venture capitalist, and Shark Tank star, joining us here on Yahoo Finance Live. Thanks again.